All right, everyone. So hope you're all doing well, and a warm welcome to all of the new traders that have joined Trading 180. I just for the first maybe 20 minutes of this week's group call, which is Wednesday, the 26th of February, I just wanted to kind of go over a bit of a summary of really what Trading 180 is about and what to kind of expect from me and yeah, basically my approach, right, to trading before we kind of get into like the weekly fundamental stuff and approaching all the fundamentals with regards to and the technicals with regards to the dollar, the New Zealand dollar, etc. Right. So again, just a warm welcome to everyone who is joined or who is watching this. And really my goal and our goal really as a collective is to really identify value, right? Exchange rate value. We're trading currencies as well as sometimes some gold. I'll throw in some oil, silver, the odd copper trade here and there, right? Fundamentals don't necessarily uh, extend to just the currencies. Everything is called intermarket analysis, where everything is pretty much related, right? So everything is tradable, but really it's about identifying value on whatever it is that you're trading. But I would say 90-95% of my focus is on the forex market, right? And we identify value, so value being discounts, premiums, whether you want to call them expensive, and cheap prices, um, using a combination of fundamental and technical analysis, right? So we're pretty much going long or short on the rumor and riding the trend. So it's important to understand that we're not waiting for the fact, right? What you'll discover if you're new to just trading fundamentals period, or maybe you're not really new trading fundamentals, but maybe you're new to this approach, is that we really are buying the rumor um with regards to identifying value in the rumor, and currencies are really kind of driven by interest rates, inflation, and GDP, right? In terms of currency value, but we're looking to buy the rumor, whether the rumor is for rate hikes, rate holds, rate cuts. Normally, rate hikes, holds, or cuts are what we're looking at, as well as things like risk sentiment and events that may start to happen in the future. Because really, the money is made in not just forex, in any market, by being ahead of the market, right? And also being obviously correct about what it is that you're betting, right? It's just how we make money. Um, but that's how the money is made in the market. It's not really, buying and selling on the day. Of course, you can do that, of maybe said news announcement, but really, what you'll come to see over time is that, the market, the smart money would have likely have made money into that news event, or the rumor, and the rumor doesn't even have to work out to be true. Markets can move based on the rumor that something will happen. The market can move up, move down, and we're trying to take advantage of really and keeping our fingers on the pulse of the rumor. If it turns out to be correct, brilliant. That's an excellent bonus, right? But ultimately, we're looking to uh, to to identify a trade idea, and that has some kind of legs on it, and the rumor um it may possibly come true, right? And our focus is on divergences in interest rates, right? All roads lead to interest rates, meaning um the main things that move interest rates, right? Because really, central banks are controllers of the currency, yeah, and they are mandated to get prices, which is basically inflation, to 2%. And so inflation is basically the devaluation or appreciation of a currency, right? and I'm not going to necessarily get into it here. It's just a bit of a reminder. I have a short course and test, by the way, as well in the Discord group that I definitely advise you to go over. But ultimately, the central bank is mandated to control the value of a currency via monetary policy, which would be, the main one is interest rates, so hiking, holding, or cutting interest rates, and other measures like intervention or quantitative tightening or quantitative easing, right? But these tools that the central bank has is just designed to control the valuation of the currency. Yeah, so ultimately, that is what drives currencies, right? People can talk about Elliott waves, they can talk about this indicator, that indicator, they can talk about blah, 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 right? None of that technical stuff matters. What matters at the end of the day, in terms of currencies moving over the medium to long term, right? And we're not talking about, 10 pip moves here, 20 pip moves. We're talking, hundreds and possibly thousand pip moves, right? Over a certain time frame is usually driven by interest rates, right? And that's interest rates are driven by what inflation is doing, and also as well what the business cycle, GDP, economic cycles, yeah. And then you also have risk sentiment and risk events that also can cause central banks to these risk sentiments can affect, for example, the GDP, or the of a country, or it can affect inflation, or both. And then that in turn will affect a central bank's thinking as to whether they may have to hike, hold, or cut rates. Now, not all risk sentiment or risk events are treated equally, right? Or because you've got local and global risk events. So let's say, for example, COVID-19 5 years ago now, which is crazy. 5 years flies. I remember it like it was the other day. Yeah. Is a global risk event, and that affected all central banks. If you go back to that time, you'll see that all central banks pretty much started cutting rates. Yeah. Whereas another risk event might be something like the Ukraine, and Russia conflict or war, right? Whereas that has mainly kind of affected, Europe and the European region, and it really hasn't affected the US or Australia or Japan, right? So different risk events will cause central banks to either not really care about them because it doesn't really affect, the country's economy, because of maybe, obviously from a geographical perspective, or it would, right? And if it does, then of course it feeds into really what central banks are going to do with interest rates. Yeah. um Hey, oh, it's Patrick. Welcome, Patrick. I saw PN. I didn't realize. I should have guessed that it was you. Welcome, Patrick. I'm just going over. I know you know this, but for the new traders, I'm just going over a bit of a summary and my approach. Right, I'm not getting into too much detail. Yeah. No worries. And yeah, we'll get onto the fundamentals in a little bit. And so it's really important as well that it's not required to know everything about everything. A lot of traders will get overwhelmed with fundamental analysis, right? There's so many rabbit holes to go down. I had a question today. I can't remember who it was from. I think one of the new traders, who was talking about overnight index swaps. And yeah, it's something that, again, maybe, if you don't know, you don't know, right? What affects forex. If you're coming in and you're new, of course it's always, important to ask, questions, right? But don't get try not to be overwhelmed with the vast amount of fundamentals data that you possibly could look at. The main things I focus on are really kind of the macro side, the like I said, the interest rates, divergences in interest rates, right? So we're comparing one country's and central bank's interest rates to another, and what their divergences are in terms of their cycle, right? That's really whether they're hiking, holding, and cutting, and divergences and differences in their cycles, right? That's really what I'm focused on. And again, we can go down the route of looking at every little detail when it comes to, you can look at retail sales. What does that mean for the currency? You can look at home building. What does that mean for the currency? You can look at all these different, economic points. It's not necessary. Stick, in my opinion, stick to the data that we have on the fundamental analysis spreadsheet. If you're going to focus on any, data points, if you go to the fundamental analysis spreadsheet, that is really the main things to focus on. Everything else, I'm not saying is noise, because it all, in some way, shape, or form, contributes to, inflation and GDP, which in turn influences interest rates. But you don't necessarily need to know, like I said, the effect of, the home builders, how many homes been built this month, and how that's going to affect the currency. The micro stuff, you don't necessarily need to. Just try to keep it as simple as possible. And that's what I do. That's my job, to simplify things. What matters the most, what moves the currency the most. Yeah, that's what I'm really kind of focused on. And surprisingly enough, it does come down to, and I've been doing this for years now, it does ultimately come down to, over the medium to long term, and even in the short term, right? It does come down to, interest rates, and risk sentiment. So directional confluence, right? It's important that not only do we, try to, continually, get the direction correct in our trades. Yeah. Um, that there are obviously more confluences that we can use, rather than just looking at interest rates and the data and saying, okay, they're looking to hike, or cut, or hold, right? So the directional confluences that are available, and I guess there are some more, but again, I don't really want you to get overwhelmed with the amount of, research that you necessarily have to do. There is a learning curve. There's always a learning curve, meaning that at the beginning of your journey, if your fundamental journey, it's going to seem quite a little bit overwhelming. There's a lot to learn, but as you keep learning, it eventually gets a lot easier. The curve kind of flattens out, and then you end up, looking at it like, okay, well, you kind of just do things automatically, right? Now, we need to get the direction right. Yeah, of course, we have to get the direction right. Now, from again a higher time frame perspective, there are confluences that we should look towards, right? And because it'd be very, ignorant or naive to think that, we're the smartest people in the room, or I am, and that, what I say is what the market is thinking. What I will go off, I know what makes sense logically to me, but what I will also do is look towards what the smart people are saying. Smart, way smarter than, high IQ. These guys are the people that are controlling, currencies, and, billions and billions of pounds, dollars of assets, right? And they do this, day in, day out, right? So they give us information, they give us clues, they give us, statements as to what it is they're thinking. Now, that won't necessarily always translate to what's going to happen today, but overall, this is what they're thinking, right? So directional confluences that we should look towards, on a consistent basis, are central bank statements, right? And comments from the central bankers, whether they're hawkish, dovish. Government bond yields, right? So government bond yields are really kind of, correlated to what, interest rates are going to be doing. And again, I have a government bond, channel in the Discord group, and it really kind of spells out, first of all, which interest rates which, sorry, bond yields you should be looking at, and why bond yields typically not necessarily even follow. They tend to lead, what interest rates, are likely to do in the future. So that can be, a directional confluence. right, to your own trade idea. Bank forecasts and analysis. So we go over, you see me regularly posting articles from Bloomberg, from ING, from all these other banks, right? And what you want to go with is the majority, right? Don't go with the minority of banks. So if we get, like, say, for example, 10 banks and eight of them are bullish on the dollar and two of them are bearish, you want to go with the eight that are bullish, right? Don't I mean, there's times to be contrarian, and you can be a contrarian if you want to, but ultimately, I think it's best to go with the majority, because that's really where the in terms, it's not like retail where you want to kind of fade retail, right? You want to be a contrarian to retail. You want to go really and ride the wave of the money, because they tend to put their money where their mouth is, right? COT, CFT, CCOT analysis. I don't necessarily put too much emphasis on COT, but I know a lot of traders do. And if you do, then that's definitely a confluence that you can use. I do post COT analysis in terms of the numbers, sorry, and the changes in positioning. But again, I'm not a big COT person. I kind of just do it to help those who are. Seasonality as well, I post, which I think is very interesting. And of course, retail positioning, right? That's where you do want to be contrarian. If retail are really, I mean, again, I'm not necessarily into retail positioning. I've been trading without it, but I know some people are. But it can be used if you want to use it as as a contrarian signal at a level, or an indication at a level. If prices are, if fundamentally, for example, you want to be long dollars, and you're seeing that retail are massively short, then brilliant, right? You're trading against them, so that's an extra confluence. Now, my approach is to really kind of identify value on a price chart from a daily and weekly time frame perspective. Yeah. So that goes into understanding just, highs, lows, higher highs, higher lows, lower highs, lower lows, and also as well, ranges, or what I term as auctions, what should be known as auctions. If you understand market making, and Mark Chapman's way of trading, with market makers, you'll understand the definitions, that whether you have to call it an auction, right? Because if you don't understand it, if you term it something different, then you're not going to understand it how it's actually supposed to be understood, right? So if you call, as Mark always says, if you call a dog a chicken, right, then you're not going to handle a dog and feed a dog and take care of the dog in the way a dog is supposed to be treated. If you're thinking that it's a chicken, you can't call a dog a chicken, because it's not. You can call it a range, yeah, and that is a descriptive word for sure. But if you don't understand that, the market is an auction, then you're not going to treat it as such. And by the way, there is a link to Mark Chapman's market making group. It's free in the Discord channel, so you can join that, and join that community and ask him some questions when he's about. Right? But it's important, when we're identifying value, we're looking at it from range highs or auction lows, and also as well chart time horizons. So 1 month, 3 month, year to date, 1 year, etc. on Trading View. So just to give you an example of that, right, on the bottom of Trading View right here. 1 second. Let me just. Then if you can see the cursor, right? Oh, well, it's somewhere down here. Anyway, you can see it here where it says 1D, 5D, 1 month, right? So that's what you're looking at: monthly highs and lows, quarterly highs and lows, year to date highs and lows, 1 year highs and lows. Are quite significant, and definitely should be looked at as well. Um, and then we are looking at then technical strategies, right? So once prices go into a zone or an area where we feel that is either expensive or it's cheap, right? Because that's ultimately what we're looking to do. We're identifying value from a daily, weekly perspective. The higher time frame value, not necessarily 5 minute or 1 minute highs and lows. We're looking at daily highs, weekly highs and lows and swings. Once you identify where you want to trade, right, or where the big money really is trading, yeah, then we're looking at, our technical strategies, right? Whether it's supply and demand strategies with, the RSI as confluence, and trend line breaks, right? And then, stop hunt strategy and CPR, in alignment with the currency index, equally weighted currency index, right? Because again, there's a channel in there talks about how to use equally weighted indexes as confluence and really identify currency value on a price chart, right? And identifying overall currency premiums and discounts. Yeah. So that's what we're looking at in terms of technical strategies. Risk management, typical just 1% max per trade. Although I would definitely suggest that if you are, new, if you're not confident, definitely less than that, right? I mean, eh, I would say if you can do 0.5%, 0.4%, the lower the better while you're learning. And then once start to see that consistency, then just scale up your position size, or you can scale up your account size, right, and keep the same position size, which is something that I do. So I scale up my account size, but I keep my risk the same in terms of max risk. And they'll also divide your positions into multiple positions. Again, that's all in the course. And also, as well, if you lose a trade, yeah, but the fundamentals and sentiment have not changed, go again and potentially again, right? So, nobody knows when prices are going to reverse, right? So I can have an idea of what I think is cheap on a price chart, but ultimately, if the market doesn't agree with that, right? Whether, I want to be a buyer here and the market says, well, no, we don't think that it's cheap there. We think it's going to be lower down, right? Then there's nothing I can do, right? The whole point in trading is just is say the whole point, but part of it is risk management. And yeah, I guess you guys know this, but when you lose, your risk is defined. If you're right about a trade, that's where you want to, maximize your profits, right? So your risk is defined, you're maximizing your profits as much as you can. Now, if prices go against you and you get stopped out, fine. For me, I will enter again and again as long as the fundamentals are still the same. So an example of that was the Swiss franc. Many of you know that I lost recently I won one position and I lost three positions. So out of four, I ended up winning one and losing three, and then prices basically stopped out my three positions. That's fine, right? Has anything changed in my view? Right, nothing has really changed. So um, even though I got stopped out and prices came down a bit lower, I just entered this morning on on an 11-hour outside candle, right there. So that's me again, just thinking, okay, we're at potentially even more of a bargain. Now, I don't know whether this is going to play out. Who knows, right? Because ultimately, we need the data to support my fundamental bias. If you don't have the data to support the fundamental bias that the dollar is a buy, let's say, for example, the data comes out, CPI data is or PCE data, and it is inflationary data comes out, and let's say, for example, it comes in lower than than forecast, then ultimately I'm going to end up probably losing the trade. I have to come out of the trade, probably exit the trade a lot sooner, because ultimately the data isn't supporting a stronger dollar. It's actually supporting maybe a more rate cuts from the Fed, which would then weaken the dollar, which would then go against my idea. But right now, that isn't the case. I'm hoping that obviously I'm getting in before the data, because obviously you're going to try and anticipate buying at value, and while you're in a trade. And if the data goes your way, then brilliant, you've bought at the lows. Everyone else is going to start buying after the fact, but we ended up buying down here, and that's really what we're attempting to do on a daily basis, right? Or a weekly basis. So but the point of this is that regardless of whether prices go against you and you end up losing a trade, it's fine, right? Just if prices go down to another level and you've got another setup, then brilliant, just enter there if nothing else has changed. Yeah, that's the key. And if prices continue to move down, then and nothing has changed, and I'll continue to look to the upside. Because if I'm correct about this, then guess what? My upside potential is going to be a lot, or should be a lot more than what I've lost. That's the idea, right? So the downside is protected. The upside, on the other hand, if I'm right about the trade, should be, you know, rewarding, and should erase any of the losses that you have incurred over um over the medium to long term if you keep doing that same thing. And also as well, just take your time. You're here for at least a minimum of 3 months, which I think is long enough for you to really understand fundamentals. Right, a lot of people came in. I used to do like monthly um subscriptions, and the reason why I kind of stopped that was because people would come in, get what they feel that they wanted from it, and then just kind of left. And if you want to understand the effect of fundamental analysis over on currencies, you really kind of need to see it play out over a few months. You need to see kind of like maybe certain changes. And by the way, fundamentals don't change too much. The guys who have been here for a while, for example, Patrick, Thapello has been here for a while. A lot of guys that have been in here, Paul as well has been here for a while. You'll notice that we're not changing our fundamental bias on a daily or weekly basis, right? A lot of times where literally when we've got a fundamental bias on a currency pair, it can last for months and even years, right? So we've been kind of long dollars and had that bias since really since Donald Trump has came into power, right? There was the rumor even before that, but it was kind of confirmed when he was elected. And you can see pretty much what's happened to the dollar. Yeah, it's pulled back recently, but there's still been opportunities to make money. And also I would never have changed anything. Even in the short term, fundamentally, the dollar is still for me a buy until the data proves otherwise. So what I would say is that take your time, don't rush. Work hard at this for sure, because it is hard work. Hard work is the minimum requirement, but ultimately, don't feel pressured. Don't feel that you have to, do this and master it within a week or two. You've got plenty of time. Ask, the questions. If I'm not around, definitely the guys in the group, somebody will answer your questions or point you to where you should, look. This is a great community. Well, I think it is great anyway. I've had traders here. I've got traders here who've been in here for years. So, that's testament to really, the group. And if you do, work hard at it, then you should find yourself, getting lots of value out of this group. So, that's Trading 180 in a summary. And yeah, let's get into our typical fundamental analysis. Does anyone have any questions, by the way? Just quickly. Anyone have any questions before I move on? No. Well, post any questions that you do have, and I will answer them if you do. Right. So starting off on the US dollar, my bias is really to buy the dollar. Still got a buy bias, but again, everything is kind of really being driven at the moment by the tariff narrative. The fundamentals are taking a little bit of a backseat, because ultimately tariffs are going to affect everybody when it comes to or the major economies and major central banks, because of the effect that, well, first of all, the US is, what is it, second largest economy, and if they start putting tariffs on other countries, then ultimately it's going to affect their bottom line, their imports, their exports, and it's very disruptive in that sense. So um everyone's kind of holding their breath as to whether these tariffs are going to be resolved quickly, and tariff negotiations are going to be resolved quickly, or whether it's going to turn into maybe protracted and kind of escalated scenario, which then creates more uncertainty around what central banks have to do with interest rates, which then will kind of benefit the dollar really. So from that perspective, again, we're just kind of, no one knows, right? We're just holding our breaths, right? When it comes to the tariffs, I believe that Donald Trump is not playing games. He's going to, continue to be quite hawkish, quite aggressive. And it says here from Bloomberg, currency traders are underpricing the risk of fresh tariffs from the Trump administration, bolstering the appeal of the dollar and the outlook for further gains, according to strategists at Goldman Sachs. So this was from last week, so nothing's really changed from last week in terms of the sentiment. But for those of you who are obviously new, and you, by the way, you guys do have access to this if you send an invite, or if you send, yeah, basically an invite, I will grant that invite. Or a request, I should say, and then I will grant that request. But if you are sending a request, just say your Discord name, by the way, so I just know who you are, so that you're not necessarily handing, you're not giving this link to, all your mates and things like that, right? So here it says, I'll continue from here. It says, ultimately, not all tariffs are equal when it comes to FX, wrote Goldman's Karen Reichgott Fishman and Lexi Cantor in a Thursday note. But given the unwind of premium in key crosses in recent weeks, we once again think tariff risks look underpriced, making long dollar exposure now look even more attractive. The Goldman Sachs team acknowledged that being long dollars might be challenging in this environment, but added that bearish bets against the euro and Canadian dollar are relatively inexpensive hedges against tariff risks. Reciprocal tariffs, rather than those against critical imports, represent the greatest upside risk for the greenback, they said. So, outside of the fundamental side of things, and the fundamental data, the market is focused on the dollar and on the Trump tariffs. So when we're looking at the US dollar at the moment and the dollar index from a daily perspective, we've come down actually to a key area that has been traded quite heavily in the past, right? So seen as expensive, basically resistance. Maybe should turn support. Also, as well, we've got a nice demand zone just underneath that as well. So potentially we could be seeing demand. So we are waiting for data, and as well as tariffs. So end of the month comes the extension. The extension ends. So Donald Trump gave an extension to Canada and Mexico with regards to certain tariffs, and so that extension comes to an end. They got to decide what they got to do. Do they basically agree and say yep, or do they say, well, no, we think that what you're asking is unreasonable, and then there's more discussions that will then probably prompt the dollar to rise against the Canadian dollar, which you're probably seeing a little bit at the moment if you go to the dollar CAD. But let's see what happens with that. But overall, I think the dollar is a buy. This is just really a pullback from last year. The dollar, I think, is on the cheaper side, but also as well, we do have the fundamental risk in terms of CPI, right? So CPI is out on Friday. I think that's the main thing that the market's waiting for. I think there's some other data as well. One second. Uh, Thursday we've got, this is durable goods orders and GDP growth rates second estimate. So the second estimate, isn't necessarily a big game changer. It's normally the preliminary, the first reading, but I think ultimately, yeah, I think Friday's the day where we have core PCE. um, is going to be definitely something to be watched. So, because at the end of the day, a way to kind of filter out as well what is important news and what isn't is just understanding that if we know that interest rates are, the main mover of currencies over the medium to long term, then you should really be focusing on, and what I focus on is what the central banks focus on. So the central banks will tell you what they're focused on in terms of the data, and what they're focused on is inflation. And so if they feel that inflation is coming down, for example, then they're going to turn around and say, oh, well, yeah, that's going to change monetary policy. So data that doesn't move or the central bank isn't considering when it comes to whether they're going to be holding, hiking, or cutting rates, should be really eliminated, really, or don't even necessarily you don't even need to focus on it, right? I've never heard a central bank say that they're going to, they want to see great numbers on retail sales, right? Yes, retail sales is an indication of how, consumer spending and whether the economy is doing okay, especially in those economies where, they're more, say, retail driven, right? And so I'm not saying that it's not important, but from the overall macro perspective, you know, I think if the big market moving events and news events are ones that the central bank is really focused on, like I said, like inflation, measures of inflation, unemployment as well, right? So so ultimately the dollar. Oh, also as well, I did notice on the dollar. This is the CME FedWatch tool. That they added, maybe the dollar as well has kind of weakened a little bit over the compounded weakness because they added an extra rate cut about a week ago. When I last looked at this, it was really just one rate cut they had priced in, but there's now two, so for this year. So that is something that needs to be looked at. Of course, you can see here on prime market terminal, let me just zoom out a little bit. Federal Reserve, the market is pricing in a little bit more cuts than they were a week ago, which makes sense, right? But is it enough when you compare it? Does that mean that you should look for short trades on the dollar? Absolutely not, because ultimately they're still cutting less than the European Central Bank, right? So the European Central Bank are going to be going from 2.75%, and by the end of the year they should be at 1.83%. So there's around about a 90 something basis point move, right? Whereas the Fed, it says 4.35. That's not correct. Interest rate, yeah, 4.5%. So they're going from 4.5% to possibly 4%, or maybe just slightly lower than that, right? So ultimately, it says here 2025, yeah, 3.77%. So maybe around about the same, it looks like. But ultimately, the Fed are pretty likely to be cutting less, just about, than the European Central Bank. Plus, the European Central Bank are going to have lower interest rates, so there's still going to be that gap there. So buying the European Central Bank and the euro over the dollar, for me, doesn't really make any sense at the moment, from a monetary policy perspective. So yeah, that's where we are with the dollar. Plus as well, we've got tariffs on the horizon. New Zealand dollar. So New Zealand dollar for me is still a continued sell. We are in a risk off environment, it does look like. I did see the VIX, in fact, I think it was rising. It rose yesterday. It's come down now. Anything above that 20 is normally seen as a bit of risk off, more risk off. So the more it rises, the more risk off. Um, so 20, that 20 mark is seen as the kind of a bit of the line in the sand when it comes to understanding maybe risk sentiment and volatility. But it's pulled back a little bit more. So, but ultimately, I still think that the New Zealand dollar is a sell in my book. They're cutting more than most. I think majority of other central banks. They're on the cutting cycle. Um, Although they're not necessarily going to be cutting by 50 basis points at every meeting now, I think they cut by 50 basis points maybe twice or three times so far. They basically turned around and said, well, they're going to probably be doing 25 basis points, but they're still on that cutting cycle, right? So for me, nothing to really kind of write home about when it comes to New Zealand dollar, nothing to warrant buying. They're in a recession still. They've had two negative quarters of growth. So yeah, not a buyer of the New Zealand dollar at all. The Japanese yen. Oh, matter of fact, let me just look at where the New Zealand dollar is. So the New Zealand dollar overall, again, we're at these lows. That doesn't make, I mean, that makes all the sense in the world, right? So anyone who, last week was looking to short the New Zealand dollar, from these yearly highs, yearly low, we've been in this auction really for a while. And so when it came up, just looking for shorts, right? Looking for shorts there, and then we've seen it basically sell off. So that's all we're doing, right? I'm not looking for long trades because it's moving higher. I'm just looking for, if it moves higher, then I'm just looking for short trades, looking for value where, to identify where the currency is seen as expensive. So managed to get in on that New Zealand dollar, US dollar, which is running quite well at the moment. So managed to get in up here. I've trailed my stop down at the moment. So yeah, I'm in a little bit of a profit. Or actually, this trade is profitable period because I did get profit on one of the positions. So I'm just trading one position down, and hopefully we can continue moving down. I'll trail my stop until I either hit target or get stopped out. So yeah, this is a now profitable trade, but ultimately the New Zealand dollar for me is a sell. Now it doesn't mean that you should sell at lows, right? You don't want to sell low. If you're looking for a sell, then unfortunately you're gonna have to either wait for prices to pull back, which I hope it doesn't because I'm in that trade. I want it to move lower, or you have to wait for it to move lower and then wait for a pullback into maybe some sort of level or some supply zone before looking at going short. So that's really your options in terms of the New Zealand. This is the equally weighted index. Yeah. Um, Looking at the Japanese yen. So Japanese yen at the moment is ranked number 2 on the fundamental analysis spreadsheet, and that is still true. So number 2 right here. And really, it's about buying the yen. Inflation accelerated more than expected on higher food prices, rising at the fastest pace since the middle of 2023 and keeping the Bank of Japan on track to raise its benchmark interest rates further. That's pretty much all you need to know, right? It's what are the central bank doing? The rumor, buying the rumor, right? It's buying the rumor, make sure the data supports the rumor, so it supports the narrative, which it has. And so that's why you're seeing the yen just keep making highs, right? So we've been buying the yen for weeks now, right? Anyone who's been in obviously the group for a while can attest to that. We've been buying the yen, and it's been moving higher. So yeah, if you do want to be a buyer of the yen, you're going to have to wait for some sort of pullback at the moment. If it does pull back, then brilliant. The nearest pullback that you're looking for is going to be, or a decent pullback is going to be pretty down to this, either this demand zone around here, or a level of, sorry, one sec, or a level of support and resistance, or maybe both, right? So that's the demand zone. A level of support term resistance would be maybe somewhere around here. Plus as well, you just want to look for the RSI extremes as well. All right. So yeah, so that's where we are with the yen. So basically, he's waiting for pullbacks before going long. The British pound. So the British pound, see, I've got it as an auction range. So just to explain that, an auction range means you can look for, buy at lows and sell at highs, right? So just to kind of annotate this, you can look for, buys at lows, sells at highs. I don't think there's necessarily a direction in terms of the pound, right? An overall direction. But I'm increasingly thinking that the pound is likely to be a bit more of a sell over the next few months. Reason being is because in the UK, for anyone who lives in the UK, you'll know it's all over the British media that pretty much energy prices are going up. Energy price cap will rise to 6.4% in April, the third consecutive hike. That will make it more difficult to achieve the government's goal of lowering bills for households and businesses, right? And at the same time, you have the new tax New taxes are being implemented on businesses as well. Taxes, the national insurance contributions, I think, going higher. The thresholds going lower. So at the moment, the British pound avoids a condition or a situation called stagflation. Stagflation, for those who are new, is when you have rising inflation but contracting economy. Now, these fears were definitely, the rumor had kind of started, and it was kind of obviously derived from the data, right? That Britain was entering into a stagflationary situation. Now, stagflation is a bit of a conundrum actually, it is a conundrum for the central bank. It's actually one of the worst. It's a really bad situation for a central bank to be in because, and this might get a little bit technical if you don't necessarily know the relationship between interest rates, inflation, and GDP, which is the reason why I definitely say to you, do the test, and then I'll give you, your marks on that. But if you have rising inflation, right, and you have a contracting economy, GDP, a central bank is in a catch-22 situation because rising inflation should mean that they hike interest rates, right? So that's interest rates. That's what it should mean. But if they hike interest rates, the effect of hiking interest rates is that you contract GDP even more because you're raising borrowing and lending costs, right? You're for businesses and individuals, you're making things more expensive, right? So at the same time you have inflation going higher. If you want to raise rates, you're going to have to say, all right, then, well, the economy is likely to contract because businesses can't, are going to have problems hiring, have less money, they're going to do less employment, for example. You know what I mean? That's so it contracts GDP and GDP ends up going lower, right? But if you don't do something about inflation and you say, let's say I want to hold, yeah, or maybe even I want to cut rates because to help GDP, yeah, because by cutting rates and lowering interest rates, then what happens is you can make obviously borrowing and lending cheaper, which stimulates the economy because businesses can then borrow for cheaper and then they can start to hire mortgage owners. If you have a mortgage still on your properties or any properties that you have, obviously that comes lower. It's more money in your pocket than you can spend in the economy, right? So cutting rates helps the economy overall, but by cutting rates, guess what you're doing to inflation? Inflation is going to go higher because you're devaluing the currency. Remember, cuts are designed to devalue the currency, and basically, inflation rising means that prices is devaluing. So you don't want to compound the inflation problem by cutting rates. So what do you do as a central bank? That's the issue. That's why stagflation is a very, 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 like I said, it's a catch-22 situation, right? What do they do? And so with that all being said, just because the central bank may not cut interest rates. Let's say, for example, the central bank hold rates. They say, okay, we're going to hold rates where it is and hope that inflation, comes down and GDP goes higher, right? Now, if they hold rates, but GDP ends up still contracting, yeah, even though they're not cutting rates, which is seen as devaluing the currency, the market is likely to sell the dollar anyway because of that situation that they're in. Because you're going to end up getting into a recession, right? Into a recession. And so from a recessionary perspective, that should weigh negative on the pound, right? Even though central banks aren't actively weakening the pound by cutting rates. So I think that is what's going to happen, and that's based on, come April, May, June, the fiscal policies of this government are going to end up causing I think anyway, the UK economy to contract. And if it does, then we start to see signs of that happen, then the British pound is going to be a sell. So I think currently today it might be a bit too early to sell the British pound at the moment, right? But those are my concerns. So I'm leaning towards selling the pound, but just not yet. I need to see just a little bit more data to confirm that rumor. And if the data starts to confirm the rumor, then I'm going to be on that British pound sell. So when you're looking at the British pound, you're seeing prices move to the upside, which is fine, right? Which is fine for me. I'm not invested in the pound in terms of, if you're buying the pound, that's great, right? The pound, I would think, in the short term should be a bit of a buy because currently, as I said, the data is supporting a buy. But in terms of selling, you know, soon, in terms when I say soon, maybe over the next, starting to prepare for a sell over the next month or so. I think, yeah, we might reach a market high somewhere around these highs, and then I think the pound is going to be decent for a sell. But overall, I think the pound, you can look for either a buy or a sell. The euro, me, I've got a sell bias, right? A sell bias on this. I don't really see the any really positives out of Europe. They've just had these German elections, which there's a lot of uncertainty around the coalition government. The ECB are cutting quite, I wouldn't say aggressively, but they're looking like they're cutting the most when it comes to the amount of basis point cuts. And the German economy is stagnant again, possible stagflation on the horizon. And yeah, I just don't see any reason to really kind of buy the euro on the fundamental analysis spreadsheet. When you compare the data, the euro is 8. And so it doesn't mean it's going to remain 8. Of course, 8s can become 7, 6, 5, 4, 3, 2, 1s, and 1s can actually turn to, get weaker, right? But for now, as a starting point and continuation, I can't see any reason to buy the euro. I think the euro really only appreciates at the moment, really based on dollar weakness, not because the euro is strong. It's more, okay, well, the dollar is devaluing, so just as a reaction to that, other currencies like the euro will just naturally start to appreciate, but in the exchange rate. But it doesn't mean that the euro is really a buy fundamentally. So yeah, that's really the euro. Again, this is kind of from last week, and it says here that the eurozone forecasters are increasingly predicting that the European Central Bank will resume rate cutting after a pause with a reduction below 2% in 2026. And it says Frankfurt officials are still widely expected to lower their deposit rate by 25 basis points at each of the next 3 meetings from the current level of 2.75, according to Bloomberg's monthly survey of economists. So, you will see, some European central bankers come out and say, that they might be a bit hawkish. But overall, I think, just focus on what Christine Lagarde says, and in at the beginning, and really what the rates are saying, and ultimately, as long as the rates are continuing to look for, the market looking to price in shorts, then that's really the shorts. The more cuts, then that's really the direction of travel, until obviously otherwise, right? So if there's data that comes out that supports the ECB not cutting as aggressively, then maybe you want to start to look to buy the euro as the market prices out those rate cuts. But for now, the euro is a sell in my book. Swiss franc, fundamentally is definitely a sell, but it's a risk off buy. Yeah, it's always going to be like that. So with any kind of risk off sentiment. Oh, sorry, let me go back to the euro as well. Just looking at where the euro is in terms of value. So from a year to date high low, yeah, we're pretty much at fair value. That's expensive for the euro. That's a bargain for the euro. That's really where fair value is. So yeah, just looking for really any pullbacks to look for some short trades on the euro. Right, there to there. Supply. Also as well, as I said, you can apply the RSI, into the kind of the extremes, and look for um, value on that in terms of sells. So yeah, for me, the euro is a sell. So I'm just waiting for pretty much a short from now on the euro. Swiss franc, again, I've been going over shorts on the Swiss franc for ages. It's another example of just shorting for months and months. But we do have, risk off in the market. So, safe haven plays, Swiss franc will appreciate. But ultimately, the central bank, the Swiss National Bank, don't want a expensive Swiss franc, because ultimately they actually they're one of the banks where inflation is heading away from their 2% target. So they're actually heading to deflation, right? Which they want actually inflation to go back up. Pretty much everyone else is looking for inflation to go down to 2%. They're looking for inflation to go up to 2%. That means that they want a cheaper currency. Yeah. They want a devalued currency. So they don't want an expensive currency. So if you look and you start to read the what the banks are kind of saying, and the board members are saying, it says here, the Swiss National Bank must have the ability to take interest rates below zero to efficiently control the strength of the national currency, according to board member Petra Tishudin. If necessary, it allows us to steer the rate differential also in a low interest rate environment in a way that the franc becomes less attractive. See, they don't want it to be attractive. They don't want it to appreciate. They want it to devalue. They want it to depreciate. Yeah. Other than other currencies, and therefore doesn't appreciate excessively. So they need actually to keep cutting rates to make the currency less attractive, yeah, to weaken the currency less attractive, so that it can then devalue to then go back up to its 2% inflation target, right? So for me, when a central bank is actively looking to try to devalue their currency, why would you go against that, right? Yes, okay, from a risk sentiment perspective, you can trade that risk sentiment, right, and try and buy the Swiss franc. But ultimately, for me, if I'm looking to trade the Swiss franc, I'm looking at the Swiss appreciating as an opportunity to actually look for sells. So again, is the Swiss franc expensive here? Because once that risk off sentiment goes, and risk off sentiment doesn't last forever, right? Guess what? The Swiss franc is going to look very expensive also as well, while it keeps appreciating. In the background, you're gonna you have the central bank intervening as well, right? So the Swiss National Bank are known for intervening in their currency, meaning that they will buy and sell their currency to devalue or appreciate their currency. And so I think it's next month we get a report to say, or that shows whether they have been intervening. And so the higher and the more this appreciates, is the more likely they are to intervene in their currency to try to keep the currency down. That's what they want. They want the currency to go this way. Yep. They don't want the currency to go this way, because if it goes that way, then guess what? Inflation goes towards zero, or it helps to push inflation towards zero and deflation, and that's not what they want. They want it to go here. So I'm not betting against them, and I'm not trading against the central bank. So yeah, Swiss franc, they're coming out and telling you that they want a weaker and a cheaper and a less attractive currency. So therefore, who am I to go against that? Canadian dollar, I think actually fundamentally it's not necessarily a bad trade, but at the moment, because of Canada's geographical location to the US, and it's going to be the most affected by tariffs, it seems like. Um, I think it's a tariff sell, right? Meaning that the uncertainty around, Canada's trade deals with the US at the moment, um, I'd rather take the caution side. I mean, even from a fundamental perspective, interest rate perspective, I think the US is still in the driving seat, but sentiment wise, tariff wise, the Canadian dollar for me is a bit of a sell, and so that's what you're seeing, right? You're seeing that play out to the downside. So I did say over the past week or two that actually for a while now that the Canadian dollar was a tariff sell, and you're seeing those fears play out, right? Especially because we're in more of a risk off environment. Um, yeah, it says here that the Canadian dollar has rallied on or had rallied on expectations that harsh US tariffs would be avoided, but the hope might be misplaced. So this was from last week. The CAD's resilience relies upon the hope that the US will not impose broad import tariffs on Canada, says a monthly FX note from HSBC. So that's basically what we're seeing, right? There was hope that there wouldn't be tariffs. The Canadian dollar rallied, and now those hopes are fading as we head towards that deadline. Risk off starts to come in, tariffs start to come in, and we get short, right? So that's really where we are with the Canadian dollar. I don't think fundamentally, interest rates are, differentials are really going to help the Canadian dollar for now. So the Australian dollar, again, I think probably a bit more of a tariff sell, but less so. It's more the Australian dollar is more of a proxy with China. So if trade tariff negotiations don't go well with China, then you're looking to sell the Australian dollar. Because of the trade relationship that China and Australia have, right? Because if China start to be affected, their economy is affected by the tariffs, then so will the Australian dollars, right? So I do think that the Australian dollar, although a tariff sell, is a more of a buy than the Canadian dollar and something like the New Zealand dollar, right? And even to a certain degree, I think the euro, I'd rather buy the Australian dollar over the euro at the moment. Um, so I think the Australian dollar, you can find reasons to buy or sell. If you are looking for a tariff sell, then obviously you'll be looking for the Australian dollar to be more on the expensive side, which basically happened last week. But I think this pullback actually could be a decent buy for the Australian dollar. We are in the cheap area, and in fact, if I'd actually move this demand zone up to here where it kind of starts from, we are in that demand zone, right? So yeah, I think you can look for buys or sells. I am in a long Aussie New Zealand trade. I've taken profit on one position, came about a pip or two taking profit on the second position. It's pulled back against me, but yeah, I don't know what's going on. But let's see. I think the Australian dollar definitely in a better position than the New Zealand dollar, but let's see how that plays out over the medium to long term. But if you are looking for buys, I think buys on the Australian dollar right now is decent. Anyone got any questions, by the way? Any questions? Any questions? 1 second, I'm just gonna take a little drink of some water. 1 sec. Right. So, no questions. I will continue on. So, overall, when we're looking at the fundamental analysis spreadsheet, and again, for those of you who are new, I've got explainers for this, but just to kind of summarize, what we're looking at is the really the rankings, right? So we're looking at, if you go across, basically measuring all of those data points, coming up with a score, and the lower the score, basically the better the currency in comparison to the highest score, which is basically going to be seen as the worst. Now, this is again a starting point. It's not, we take this for gospel, because ultimately we need to understand what's potentially happening in the future, right? Whether this is going to remain a buy or whether it's going to remain a sell. And that's what the currency value cycle is about. And that's basically what, my analysis over the past hour has basically been is just, where are we in terms of future potential value, right? So when I say I'm long on dollars, I still think that the dollar should continue to appreciate, right? So when we're looking at the currency value cycle, it's just a visual way to really kind of place where the rankings for the fundamental analysis spreadsheet is on the cycle. So we've got the United States as one, two is Japan, three is United Kingdom, four is Australia, five is Switzerland as joint faith with Canada, seven is New Zealand, and eight is the euro. And so what we're looking for is really divergences or convergences. So divergences, right, where we're buying one, twos, threes, and fours versus, and selling five, six, sevens, and eights, right? I'm looking for the biggest divergences, or you're looking to sell one, twos, and threes, and fours, and buying five, six, sevens, and eights, right? But first of all, we need to place them where we think, or at least I think, they are on the currency cycle, right? So I think the dollar is a buy. So I think the dollar is going to be placed on this end. I think the Japanese yen is also a buy, right? So I think it should be placed on this end. The pound is middle of the road for me, right? So I think you can look for reasons to buy, but also reasons to sell the pound. Yeah. So it's somewhere around here, middle of the road, right? In that auction. Phase four would be the Australian dollar. And again, I think the Australian dollar would be somewhere around here. You can definitely find reasons to buy and reasons to sell the Australian dollar. And then we're looking for five, which is the Swiss franc, right? So five is the Swiss franc. I think it's on the devaluation end. Yeah. Six. I also as well. Canada is number five as well, and I think Canada is probably again more on this end, right? Because of the tariff side of things. Number seven is the New Zealand dollar, and I think that is also a sell. And eight is the euro, which is also a sell. So at the moment, we're only really looking at divergence trades, but there are times, and there will be a time. Let's say, for example, the Canadian dollar, they do a deal, um, and with the US, and then their trade negotiations are over, right? Then in fact, I think the Canadian dollar could be on the revaluation end. It can go from five to four to three to two, maybe even one, right? I'm not saying that it will, I say it could. So it would be placed more on this side. But for now, I think the Canadian dollar is still more on the devaluation end. So you do get convergence trades. So for example, you could have a convergence where something could be ranked number three, but or two or even one, but something happens where, let's say for example tomorrow, inflation for the US dollar, or Friday I should say, for the US dollar comes out, and let's say for example it goes in minus 0.1, right? Imagine that happens, 0.1%. That would be so shocking to the market that they would have to price in more cuts. Yeah. Which would then mean that the dollar would have to be, even though it's ranked number one, would be on this side of the currency value cycle. Yeah. So this is just, again, like I said, an illustration of where I think we are, right? You can agree or you can disagree, right? You might place a currency, you might think that the dollar is a sell, right? Some people do. And so you might place it here for the reasons, that you think that it's a sell, more of a buy. And just to kind of maybe go over as well, to kind of clarify, or maybe a way of thinking about whether you think something is a buy or a sell, just from a really kind of simple perspective, think about why the dollar is plus and minuses. List its pluses in terms of what makes the dollar a buy, yeah, and what makes it a sell. And if you've got more pluses than minuses, then it should be more of a buy. If you've got more minuses than pluses, then it should be more of a sell. But then you also have to compare it with another currency, right? Because we're always comparing it because, you know, trading in pairs, right? Currencies trading in pairs, same thing, right? Plus and minus. So if you've got more minuses than pluses, then, and even if you thought that the dollar was a sell, if the euro, for example, has even more minuses than the dollar, yeah, then ultimately it's the dog with the least fleas, right? The dog with the least fleas is going to be the dollar. So it's got maybe two minuses, and you think that that's, you know, enough for you to want to sell the dollar. But when you're looking around to try and, you know, what do you want to sell the dollar against and go short against, and you're looking at the euro, but the euro is even worse, then the dollar's really still a buy against the than, you know, the euro. Yeah, so that's really the way to kind of look at, you know, when you're judging currencies. Another way you could look at it as well. So with that being said, so one second, let me answer this question. So Patrick says, do you consider correlations when trading? Not as much as maybe I should, but I, I think I've gone through my career without necessarily, you know, using correlations. So no, is the answer, but it doesn't mean that you shouldn't. Yeah, if you find that that gives you an edge or enough of an edge, then I would say definitely use it. But um, I'd say I'll finish off the question. For example, if you're bearish on Aussie dollar but bullish on Aussie Swiss, would you be cautious about going long on Aussie Swiss since weakening Aussie dollar could indicate broader Aussie weakness? See, broader Aussie weakness for me is more indicated on the index. Do you know what I mean? So I would look at overall index and go, okay, well, the Aussie, okay, it's weak. All right, fine. Then I would probably say, all right, then, well, who has the most problems? Again, going back to the fundamentals monetary policy. So that's one of the reasons why I don't really look at correlations, because you're right in your logic, it could, but if I'm seeing that the Swiss National Bank are looking to devalue their currency, and but I'm looking at the Fed and they're looking to say, all right, then I want to continue holding rates or maybe even look to hike rates, then no, I'm not. I'm just looking at the Swiss franc weakening, and I'm looking at the dollar, you know, strengthening, and so I'm going to still stay in that Aussie Swiss trade. Does that make sense? As long as obviously I want to be a buyer of the Australian dollar. Yeah, no worries. But let me just continue on. You could indicate broader weakness or risk. And again, so for example, in the risk off sentiment, that's different, right? Both because then both currencies in terms of the dollar and the Swiss franc are both considered risk off currencies and safe haven currencies. So then in that environment, I wouldn't want to buy the Australian dollar. You know what I mean, against either of them. But in terms of correlation, market, you know, price correlation, no, I don't really look at the correlation between the two. Yeah, got it. All right, cool. No worries, no problem. Right. Uh so yeah, so that's where we are with the pairs. And so once we've decided on which pairs we're looking to buy and sell, so you know, the dollar being number one, yen being number two, definitely buys for me. The pound in the short term is definitely better than some other currencies. So you can look at, for example, I don't know, the pound versus the euro, the pound versus the New Zealand dollar, even the pound versus the Swiss in a risk on environment. You know, and the Australian dollar, right? Apologies, pardon me. This is where we get our or this is how we derive our pairs, right? So when I go to the pairs tab, right, I can then now start to look at and match the pairs. So because I want to be a seller of the New Zealand dollar, right, and I want to be a buyer of the yen, that's my bias is now a sell. So now what I'm looking for is sell trades, right? So I'm going to that pair and I'm waiting for a pullback. Bit annoying that I did get spiked out of a trailing stop, even though the data was good, right? I would have made, yeah, I would have made a very nice. I had two positions open. That would have been a very nice trade down to these lows. But ultimately, it is what it is. We move on, and so we're just looking for now trades to get involved in on pullbacks. That's it on the daily chart. So either a pullback into where's my thing? What am I doing? Even a pullback into that zone there, but of course as well, just be mindful that you do want the RSI above fair value at least as a bare minimum. If you can, even better would be the RSI being above the 94. But yeah, that's really what you're looking at, or pull back up into this zone here. Now this zone is more of a CPR trade, right? That's been, it's slightly different in terms of it's not uh, drawn with any dots or anything like that, but that area there is known as a new CPR, and I'll just go over it. I went over it last week, and it was really because you had good news for the yen, which was inflation came in higher than well, I think definitely higher than expected, but you had price do the opposite in the short term. So prices basically drew in long traders and then collapsed on them, caught them. So if prices ever come back up here, that's a capture. We're down here, a lot of traders suffering a lot of pain at the moment, and then there's some relief there. So that zone, although it's not necessarily part of the daily zone where it is, it kind of is and it isn't. It's just below it. I think here is a nice intraday CPR zone. So that's what I'm looking at on the New Zealand dollar. Euro New Zealand. So I'm not looking to this is known as, by the way, just for anyone who's again who's new. So you can look at the base and the quote currency, right? Base quote, and it has the rankings there. So the Euro New Zealand is 8 versus 7. For me, I don't know who is the better out of the two. Yes, they have, the New Zealand has actually a higher interest rate, but yeah, I don't think that's enough of a factor for me to want to buy the New Zealand dollar, over the euro. Although you can still do that. So I'd rather just stay out, right? Stay out of that. So that's why I've got something called neutral. Pound New Zealand is watch. I've got it as on the watch list. Now the watch list for me is I will trade it, but I'll enter into a smaller position size, right? I'm more of a cautious buy. Or a cautious sell. Now, in this example, or for this pair, the pound for me can be used as a buy. So, although I'm not, bullish on the pound, I think it's definitely in a better position than the New Zealand dollar. So then, all you're looking for is sell trades, right? On that, buy trades on that pound New Zealand, and it's actually working out quite nicely, right? Looking for long trades, so no short trades. No need to look for shorts at the moment. Just waiting for maybe a pullback into a demand zone before getting long, taking maybe a small position. In fact, the whole area would be considered demand. And if you get a wide area of demand, just look for support and resistance, within that area of demand. But ultimately, you're looking for a decent pullback alongside, again, the RSI, to kind of determine whether you're buying at value from like I said, from a relative strength perspective. Let me just put the CVD on as well. That's where we are from a daily perspective. So buys on a pullback. New Zealand Swiss, you can look to sell this and short this in terms of buying the Swiss franc in a risk-off environment. But personally, I'm not really a buyer of the Swiss franc, and I'm not really a buyer or a trader of risk-off environments typically, unless I think it's going to be quite long lasting or it's very clear what the risk off sentiment is. I know some traders, they will, try to determine the day's risk sentiment. To me, I could never work out, because the Swiss franc is rising today, that it's risk off, and then it's sold off, so now it's risk on. Like, it doesn't work like that. I don't think anyway. So there's got to be a very strong narrative for me to want to buy um, a risk off currency if fundamentally it's not doing good. So rather than buying the Swiss franc in a risk off environment, I'd rather just buy the Japanese yen, right? Because fundamentally it's good, or they're hiking rates, and it's a risk off, it's a safe haven currency. So that's double positive, right? So ultimately, why trade the New Zealand Swiss when you can trade the New Zealand yen? Right? That's the way I'd look at it. So I'll skip that. Also, as well, New Zealand, sorry, the dollar yen, I'm not trading either. I don't think there's that much of a divergence anymore, so there's better trades out there. And if I want to be a buyer of the dollar, it's not going to be against the currency that is the second strongest. You know what I mean? So there's weaker currencies out there like the euro dollar, right? So euro dollar, my bias is to look for short trades. And as I said, or if I haven't said it, I definitely indicate it that I'm not trying to predict what when my bias isn't, or please don't confuse my bias with the direction, what I think the direction is going to go in today or this week. I have no idea what price is going to do at any point in time. Yeah, so I'm not saying that yes, today or this week we should see a lower euro dollar. No, who knows, right? I don't know. But I think overall, yeah, over the medium to long term, maybe over the next few weeks or so, at a minimum, we could see, in fact, a really nice stop hunt, yeah, to the downside. All I'm looking for is an area where I think the is expensive for the euro, is cheap for the dollar, and I'll let the market determine the setup. Yeah, many traders, I think they get caught up in trying to look smart, right, in terms of the forecast and predictions. This week the euro should rally, or this week the dollar should rally. I don't know. Who cares? Like, you can't do it. And then what I would say to those people is, if you know, right, then bet your house on it. Yeah. If I knew something was going to happen, if someone said to me, bet on the sun coming up in the morning, I would bet the house, right? Because that's a very high probability trade, right? It's a high probability scenario. I'm not betting, that, what I mean, to on my ego. So just wait for the setup. My bias is for a short. Cool. I have no idea when it's gonna, when it's gonna go short, right? So I'm just looking for a short trade. For me, I think this stop hunt setup is nice. It's really setting up. I think there's a lot of liquidity above this level. Very accurate right there. One, sell off, sell off, sell off. Little one here as well. There. And I think traders are being pressured at the moment. I think maybe the 106 is a fresh area of supply. If it can come up here, I'm looking for a short trade. And that's what I'll be looking for sure. So there's a setup right there. Pound dollar, again, it was on the watch list. I think the pound can be actually quite a nice sell. We are up into this. I say quite a nice sell. It's going to be quite a nice sell when, or if, the towards maybe the end of March, April. Patrick says looks like the perfect trade too. Yeah, it really does. I just need the fundamentals to kind of play out, right? So I've definitely got my eye on this. I'm seeing as well. There's several indicators. You've got CVD and the RSI, right? So you've got CVD. That was the high of the of the market, making higher highs. Right, I'll change that to actually CVD and RSI. Right, so you're seeing RSI and CVD divergence. So CVD making lower lows, right, and you've also got 94 at the moment, and you've got 92. Yeah, so there we are. So both of those are signaling that there's price exhaustion here, as well as some RSI divergence, which is always a decent indicator of a reversal, right? So that's what we're looking at. I do like that. I really do. But technically, just need that fundamental. And also as well, you've got the pound, which is, on the index, is on the expensive side. The dollar's not so cheap anymore. Not as cheap, you know what I mean? But if it can pull back into below the 50, then I think that's going to be a nice sell. But again, I think the narrative around the pound has to change. But technically, it's very nice. Moving on to the Aussie yen, and again, you can look for buys in a risk-off environment. You're buying the yen. In a risk-on environment, you're buying. Actually, I don't even think you'd buy the Australian dollar against the yen. So I'm going to stay out of that. I think there are better trades to trade the Australian dollar against. If I'm buying the Aussie, it's not going to be against the yen, and if I'm buying the yen, you could look at it. You could actually buy it against the Australian dollar from a risk off and even a fundamental perspective. But I think fundamentally there are better trades to buy the yen against. So I'm gonna leave that. I'll skip that. Dollar Swiss. I am in this trade. Got into it this morning. It's pulled back a bit. Oh, pulled back a bit. Not to worry though. This one I actually put a bit of a wider stop, right? So, reason why, right? Reason why. Normally I would put half the ATR. Oh, 1 second. Normally I would put half the ATR, and half the ATR was about, I think it was about 15 pips. Yeah, so it was ATR was no, it was because I wasn't doing it on a daily. It was the 11-hour. Yeah, so the ATR was about 26 pips. So I think you should have maybe about a 15 pip stop as a bare minimum. So half of 26, is going to be what, 13, right? So you don't really want a 13 pip stop. So I want to have 15 pip stop as a bare minimum. But I thought I'd give myself a bit more breathing room, which you can do, right? Because I think that maybe this could spike and stop hunt, right, before going higher, because you've got actually an accurate level right here. So the reason why I got a wider stop is because I think that level could be stop hunted before the event. Yeah. So you got level, level, level. That's confirmed it. That moved to the upside. And I think it could stop hunt and then move to the upside. So I thought, let me have at least about a 30 pip stop below the level so that I don't get caught with that stop hunt. That makes sense, everyone? So you can not change your rules, but it's within the rules parameters in terms of where you place your stop. You don't have to be so fixed. There's it's a bit of dynamic thinking in terms of I mean, not every scenario is the same. So if you're trying to, if you want a tight stop, if I wanted a tight stop, then I'd have to accept really the the fact that I could get stopped out on a stop hunt and then have to re-enter. So I thought, what's the point in going through all that? I might as well just place a wider stop and see what happens. So that's where I am with the dollar Swiss. And again, this is going to be driven by the US data. And at the moment, no one knows what's going to happen. The forecast is for higher CPI or PCE, I should say. And hopefully, I'm just hoping that it comes through. If it doesn't, and the dollar starts to fall again, then I'll try and get out of these trades, as soon as I can, if I don't get stopped out and take a small loss, and I'll just move on. That's it. That's all we can do. So that's the dollar Swiss. But if you are looking for the dollar Swiss, then basically you're looking for that setup, right? You're looking for a stop hunt, or you can look for a buy, pretty much, now if you can see any kind of entry. There's no entry on the 9 hour. Doesn't look like it. Nothing on the 10. No, there's nothing on the 10 hour either. So yeah, nothing so far. Maybe the next one would be the 22. The 22 hour is still showing an outside candle. So if it closes bullish on that 22 hour, which is going to be in 3 hours 28 minutes from now, then you can look for that as an entry. Um, so yeah, that's where we are with the dollar Swiss. What time is it now? Okay, got about 25 minutes. Euro Aussie watch list. Now I do think that this is a more of a sell than a buy. Interesting. See, we just got this. I think this is a stop hunt trade. Yeah, looks interesting there. Level, and then you've got the spike up, stop hunt, and then prices coming to hopefully, if this does close, what will it be on? It's not given necessarily an entry, but if you're trading that lower time frame, like the hourly, then you would really wait for maybe a close that's maybe about 15 or so pips. So I think price has to really kind of close there, 15 to 20 pips below, to kind of get maybe a bit more confirmation. I'd probably say 20 pips, just for yeah, 15 to 20 pips below the below that level to want to look for a short trade. But that is very nice. It's a very nice trade. The only problem is obviously in a risk-off environment, the euro would or should strengthen over the Australian dollar, but I think that could be considered on the expensive side. So yeah, I think it's probably worth a short trade if anyone wants to get involved in that. A small position as well, smaller position than usual. Pound Aussie note, New Zealand CAD note, Aussie Swiss again on that watch list. Fundamentally, you definitely want to be a buyer of the Australian dollar, but just um, from a risk sentiment perspective, it's a bit difficult at the moment. But yeah, I think that's nice. We've pulled back. RSI is in the extreme. The Australian index is seen as cheap, right? And the Swiss franc is seen as expensive. So it ticks all of the boxes technically. Ticks a lot of boxes technically. You've got nice support and resistance there as well. You've got resistance, support, support, bouncing off that level. Is it not near a round number, unfortunately? But yeah, you've got enough confluences there. I think you don't necessarily have any divergences on the CVD though. Maybe on the lower time frame there might be something. Yeah, lower time frame you can see. Yeah, there's a bit of divergence right there. In fact, that CVD or the RSI at least. Sorry, not the CVD, RSI. So a little bit happening there. Lower lows, but higher lows on the thingy, but not on the CVD though. But yeah, RSI divergence. So that's looking quite nice. Also, as well, by the way, you do have the Swiss economic. Where is it? Swiss GDP. Yep, quarter on quarter. Now the consensus is actually for a contracting economy, right? The forecast, by the way, if you see forecast and consensus, the difference is that this is the overall consensus, market consensus, whereas the forecast is from Trading Economics' own economists. So that's what they think, and this is what the general market economists think. So 0.2%. So if it comes in lower, then of course, that's pretty much a sell, right? Because you've got a contracting economy, you've got an expensive currency, that just adds to reasons for the Swiss National Bank to look to cut rates. That's it. You know what I mean? They're going to have to try and boost the economy with rate cuts, and also as well, expensive currency look to cut rates. So you could start to look for an entry to get ahead of that, and then of course, none of us know. It's a gamble. It's a risk. If you lose, you lose. It is what it is. But if you win, then your upside potential, hopefully, is can be quite a lot, right? If the market thinks that this is a bargain price. So that's where we are with the Aussie Swiss. CAD yen was on the watch list again to buy the yen and sell the CAD. That trade, whoever got in on this, I think someone got in on this trade. That's a very nice trade there. Waiting for a pullback. Made lower highs, lower lows here. Right there. So either waiting for a pullback all the way up there, or maybe I think that pullback into that supply zone is going to be a bit too it's not a deep enough pullback basically in my book, but it's nice because you can see that level there, support, and then it's broken. So that supply zone, technically it's quite nice, but just need maybe a bit more on the on a pullback, but decent. Euro CAD, no. Euro dollar long, euro dollar, sorry, dollar CAD long, and you can see what's basically been happening. Yeah, that was whoever bought that, nice, very nice in terms of a trade. Now you got to wait for a pullback down into a demand zone. That's it. Pull back into a demand zone. Aussie, New Zealand. There was CPI news that came out on the Aussie news on the Australia for the Australian dollar. It came out as expected, but I'm thinking that the from an interest rate perspective, the I don't think it's really changed much. They're still expected to hold 83% chance of a hold. Um, slightly more cuts being priced in, but yeah, I think there's more cuts being priced into the New Zealand dollar. I think the New Zealand dollar, um, or the Australian dollar definitely has the edge. So I am going to still continue to look for long trades. I've taken profit on one position. So basically, ended up getting involved in I think it was like an 11-hour, 1 second. Yeah, that was it. The entry candle right there. And then prices came down, triggered me into all four positions. When prices pulled back, I got profit on one position, and I was literally about 2 pips away from that second position. So you see here, when the market spiked up here, literally it was on my take profit, but because of the spread, yeah, I didn't. My sell order didn't get triggered by the buy order, so and then it's kind of just come down. So a little bit frustrating, but what can we do? I'm in that trade for a bit longer. Hopefully we can move to the upside again. So and then I've got my other take profits, one there and then one there. But if you are looking for a trade, I think from an intraday perspective, in fact, I think this is actually quite nice for a stop hunt into a demand zone right there. You can see the market's been moving in that auction. So if it stop hunts, does something like that intraday, I think that could be very nice for a buy. So nice pound CAD watch list, but I was probably looking at more of a long than a short, and you can see, look at that. A lot of times we get the direction right. Yeah, a lot of times we're getting the direction right. Sometimes you just can't really get involved in the trade, right? So we were looking at last week just to pull back to a demand zone, but look, prices just keep going higher. So, yeah, just waiting for more pullbacks on that one. That's it. Boom, to the upside. That's what we're looking for. CAD Swiss, nope. Aussie CAD, nope. Pound Swiss. Now the pound Swiss, um, again, more in a risk on environment. I would definitely say more of a long trade. Even like I said, fundamentally, you would probably want to be more of a buyer. You can see it's kind of bounced off of that demand zone there. So it is reacting, but buying the pound at highs is going to be very difficult. That's the only problem. So, yeah, I think a deeper pullback would be a nicer trade, and then hopefully you can get some risk on sentiment, but also as well just be mindful of that pound as well, because the pound, like I said, moving into March, April, I don't really think that it should be really a buy. Swiss yen in a risk off environment, they're going to compete for safe haven status, which is the reason why you're just seeing prices move, sideways. But fundamentally, the yen is the buy, right? So if anything, if it can pull back, I think that's going to be very nice. Made some decent money from around here as well. Actually took profits. Yeah, took profits there. I think it was. Um, no, it was, where was it? From up here, took profits around there, went lower, and now just waiting for a really a trade. Actually, no, I'm getting involved in this one as well. Yeah, end up getting involved in that one, and then to the downside, took profits here. So yeah, taking multiple trades on this one, on this pair. So I'm hoping for another pullback to get involved on this to the short side. But I think we need the yen index to pull back because it's on the expensive side. It's at highs. So although it looks good on the pair, you just need the you need a pullback, I think, on the yen, to at least some sort of fair value demand zone before looking at going long. Um, New Zealand dollar, US dollar. As you can see, I am in this still. So I went over it earlier. Trailed my stop down. So I've trailed my stop down behind that candlestick there. 10-hour candle. Made lower lows. And so, yeah. Target's down at here. I'm only in one position now. Took profit on one position. So now trying to trade that. Hopefully we can continue moving lower. Aussie dollar, US dollar. In a risk off environment, that should be more of a sell. You're seeing that play out on the daily as well. Right there. And yeah, I think the path of least resistance should still be to the downside on that. So yeah, it's on the watch list, but I'd rather short the New Zealand dollar. And then you've got euro yen, which I think is also a sell. So yeah, prices hit these lows. So any pullbacks up into an area, I think, should be a short trade. In fact, there is a supply zone right here. Hidden supply right there. So yeah, just waiting for a trade. Waiting for a decent pullback on that euro yen. So I feel like I've been talking for ages. It's been an hour and 43 minutes. Right. Is there anything that you guys want to go over specifically? Uh, if not, then I'm gonna actually just call this meeting over. Is there any pairs that you want me to go over or anything else? If not, then I will call it an afternoon. Going once, going twice. You can turn your mic on if you want, if you need to turn your mic on and ask, because you might be typing. But if I don't get a response, then I'm gonna end the call. All right, all good. All right, guys. You're welcome, Patrick. No worries. I hope you all, especially the new guys, had a great session. It was informative, and yeah, just ask as many questions as you want. They say a closed mouth doesn't get fed, so don't be shy. There's no such thing as a stupid question. Ask away, ask in the group, and we're here to support each other, and so and get the best out of your results. So yeah, that's it for this week, guys. Have a good one, and take care.